Good morning, everyone, and welcome to the July session of the Ag Economic Dialogues. I'm Heather Gessner, and I would like to welcome you and thank you for joining us today. Great to have a bunch of people online for today's session. You will also be getting a recorded copy of this following today's session. So if you have questions later, or if you want to share the information with someone else, please feel free to do that once you get that recorded link. We're going to start today with Jack Davis, and so I'm going to kick it off to him and he can share his screen and we'll go from there.
All right. It just threw me for a loop because it said June on there instead of July. But I think I got the right slides. We'll see what happens here.
So far, it looks good.
Yep. So Jack Davis, and the Crops Business Management Field Specialist out of Mitchell office. I'm going to just review quickly the WASDE that came out on the 12th and look at kind of where we're at for price and conditions of our crop, both national and in the state. So looking at our 2020 balance sheet, they raised projected feed usage by 25 million to 5.725 billion bushel. No change in ethanol usage. That had gotten changed in June from the May, but no change going into the July. No change in exports. And that ended up then lowering projected carryover by 25 million bushels. So quite low on our stocks to use in this crop that we're currently using up. In the 2021 balance sheet, the crop we're growing. Of course, the yield is held steady. The first actual field test and stuff will take place in August. And the weather wasn't really poor enough to adjust that on a national basis. So that's the increase in production really came from our increased acreage that we had in the June acreage report. Increased feed usage by 25 million, no change in ethanol usage, and increased exports by 50. So ending stocks ended being increased by 75 million bushel from the June estimate. Stocks to use up slightly at 9.6 from 9.2. Still fairly tight with the crop that we're growing. And of course, if we have problems, there could easily be an adjustment. So just looking at the crop we're using and how it's changed from anticipation last year to it getting used up this year, really dropped as we got harvested and then through the year as we've used it up, and the prices easily reflected that. As we can see here, our corn ending stocks kind of back in that 12 to 13 time frame as a stocks to use ratio. So prices somewhat similar to where we were at that time. I think things that guys got to be thinking about, how much can you sell? How's it going to produce for you this year? If you have sold ahead, do you have enough crop to cover that? If not, what are your options there? And then also be thinking about next year's crop and putting that in and see where that pencils out to be. Also, as you're making your marketing decisions for this crop that's growing, where is your profit margin and what do you have there? So just looking at took South Dakota cash monthly corn price received and just broke it down into some different time frames there. You can see 2008, 2011, the average was 388. And the high price time, 2011 through 14 was 544. And of course, we went into our low in 15 through 20 is right at 328. The average for 2021 is about 580. Not January 21, since January 2021 through May, and May was right at 705. Now looking at the crop that is good to excellent and comparing that with 2012. So the bars are, they're good to excellent for this year on a national basis, and the area coverage is from 2012. So we started out about even with 2012, and now as a nation, we're a little bit better. The eastern part, I think it's a tale of two cities or two locations anyway. The eastern part is kind of has received ample rains. Temperatures are a little more moderate, and the western part, as we'll see, is in tougher condition. So on a national level, not decreasing like we did in 2012 as far as good to excellent in our corn crop. Looking at South Dakota's, just really been tough. Not even as good as 2012. If I'm remembering right, in 2012, we could almost go north of the interstate or just a little bit further, and most of the state looked pretty good, probably up until this week. Whereas in the southern part, during that time frame, they had already probably burned up in 2012. And then this year, just all of the state just looked tough. I think part of it was cold May, and then we just had that heat. Uneven emergence for the most part, what we're seeing, and again, the heat and lack of rain. It's really just relying off past moisture. And now we're getting to a time frame where it's really going to need some moisture to finish out and become a good crop. So we'll switch and look at soybeans. The reduced imports by 15 million bushels down to a total of 20, reduced the crush by 5 million bushels, and reduced the export forecast by 10. So the carryover was really unchanged at 134 million bushels, 2.9 or right at 3 stocks to use ratio. Did lower market year average price by a little bit, by 20 cents to 11 1/4 for the crop that we're using up right now. The 2021, no change from June. So production's held the same, the crush was held the same, all of it held the same. Ending stocks are 155 million bushel. It's up. Our stocks to use is up slightly from 2020 at 3.5, and a market year average price expected of 13.7. So, still very tight stocks to use for our crop that's currently growing. And again, there's a lot to finish that crop out yet as we move forward. Again, just looking at that crop we're using up and how its forecast has changed. Last August is kind of when everything dried out on us, and as we got into harvest, we saw how much that poor August weather had decreased the crop. And then, of course, exports were good, and our crop was used up. Again, looking at excellent and good conditions for our soybean crop, again, versus 2012 on a national basis, not looking too bad. Right in that 55 to 60 area for amount that's in good to excellent. But South Dakota, probably one of the toughest looking soybean years in quite some time, according to these ratings. just taking a look at the area that is in drought. This is from the Drought Monitor on July 13th. 36% of the corn production area is within drought. So the dark green is the major crop growing area. The red hash, of course, is the drought area. And most of that's coming out here, South Dakota, North Dakota, Minnesota, and part of Iowa. It's a major part. So as it says here, 10% of acreage in North Dakota and South Dakota, 9% of the national corn acreage is in Minnesota, and 14% is in Iowa. Same map looking at soybeans. 31% of its growing area is in some type of drought. 15% is of our total acreage is in North Dakota and South Dakota. 9% in Minnesota and 11% in Iowa. Just wanted to reflect on prices a little bit, where we were at last year and why maybe $9 beans look good as we sold that crop, or even 10. But there's where prices were last year for the crops, and then this week, and these are Central South Dakota bids. So just interesting on how quickly it changed around price-wise and, of course, production-wise. And then taking a look at where crop insurance prices are. And then I just compared again to last year and what our spring prices were for this year, and then the time period that the harvest price is calculated. So we're in the middle of our winter wheat price discovery now for harvest price, and that, as of this morning when I looked, was at 610, and its spring price was at 498. That is what I have for today. So I will stop sharing.
Anyone have a quick question for Jack at this time? Otherwise, we will open it up for questions at the end of the session if you come up with something at that time. Okay, with that, I will ask Dr. Dierson to turn on his microphone, camera, and share his presentation with us.
Good morning. Yeah, just a second. I assume you can see this now, Heather?
That is correct.
All right, thank you. I'm going to take a look at the feed situation. This is not a linear path, so I'm going to look at different aspects of feed, and I'll try to pull it together to say this is where the decisions are to be made as we look at the remainder of summer and headed into the fall. So the hay situation, or the feed situation, with some dryness. If we go back to sort of the beginning of summer, across the United States, we're in okay shape as far as hay supplies, so a big component of feed supplies, especially related to cattle. So there was a good supply of old crop hay to be found. South Dakota kind of led the nation in terms of having old hay on hand. That's the good news. And if you can see, you've got a dividing line here. You run down the Central Plains, good supply of hay across the Central Plains, good to the east and bad to the west. And that has just kind of continued as the new crop year has gone on. So if we look at where the hay acres are across the United States relative to droughts, this is straight out of the Drought Monitor. You can see that the Dakotas are sitting there with good hay production areas and bad drought conditions. I'd throw the state of Montana into that mix as well. But then you can see we've got some states like Missouri and Texas with large hay production that are not affected by drought. So hay comes down to location that matters. So keeping in mind, we've got the drought conditions pretty much across the northwest part of the United States and southwest United States. What does that mean in terms of what we're going to see for prices and production this year? Well, we don't get yield projections at the national level until the August crop reports. That'll be for both alfalfa and other hay. So got a map here, or a couple of maps showing last year's production just for perspective. This is the alfalfa for production first. You can see that states like Montana, Idaho, and California have a large amount of alfalfa production. South Dakota comes in there as well. And then if we look at other hay production, so predominantly grass hay, that's concentrated in the southern part of the United States, especially Texas and Missouri, big states there. So these two states, or this area, is relatively unaffected by any drought conditions. And we look at where the alfalfa and alfalfa mix production is, that's highly affected by drought conditions. But here's the caveat that separates the West from, or the extreme Western states in the United States from this part of the country. If we look at where hay gets predominantly irrigated, we can see Washington State, Oregon, California, Idaho, 60, 70, 80% of the hay would be irrigated out there. Wyoming's also sitting there with 80%. So those states, yes, their production would be affected by the water supply and irrigation water supplies, but you're not looking at dryland hay production or dryland alfalfa production. If you switch and look at South Dakota and North Dakota, almost none of the hay in either state is irrigated. That's where we're going to have local yield fluctuations that are extreme relative to the rest of the country. So that's why lack of hay in this area will be a concern, and less of a concern big picture when you head out west. What's the implication of that? Well, it's twofold. One, at the US level, hay production is expected this year to be down just slightly from last year, and disappearance also expected to be down slightly. That means the US hay price is up just slightly compared to a year ago. That's based on current projections from the Livestock Marketing Information Center. So if you like the details of that, please let me know. Happily share that, the detailed information. They do provide a breakdown of alfalfa and other hay. But zooming in specifically on South Dakota, this would have been the outlook for 2021. Based on expected acres and using trend yield and adding in these the May 1 stocks, we'd be looking at a hay supply situation that would be pretty much even with the last couple of years, are around that 8 million tons of supply to feed animals throughout the 2021 into 22 feeding period. But the drought conditions have had a twofold impact on expected supplies. We zoom in on 2021 and do some revisions. The acres from the prospective plantings back in May until the June acreage report released at the end of June showed a slight decrease in the amount of alfalfa acres in South Dakota likely to be harvested for hay. So take the sort of reduce the size of the factory slightly, and then overlaying that, I included a yield projection. So based on, I used roughly the yields from 2012 in here, overlaid that on in place of the trend yield for both the alfalfa and other hay acres, and that greatly reduces the production of hay during 2021 and greatly reduces the supply. How much, or by how much? Well, it's about a 2 million ton impact. So all that's production related, but production coming in about 2/3 of normal or 2/3 of expected. So what does that mean? That means there's less supply to go around. You could say, what if you could perfectly distribute all the hay that's available? Well, if demand had not changed, you could just take this beginning stocks here and say that's about what got used up last year. But feed consumption last year was very low because of a fairly open winter, fairly agreeable weather, which allowed for a fair amount of grazing, reducing grass supplies, sort of contributing to the feed problems we've got now. A couple other things, or a couple other different ways to look at the situation. If we just look big picture at the land and farms, I'll just focus here on this last column for South Dakota. There's 43 million acres of farmland in South Dakota. About 23 million acres of that is permanent pasture. So a little more than half the land area in South Dakota, permanent pasture, 16.4 million acres of cropland. And then I've got harvested forage in there. This is for the 2007 census. About 3 million acres was harvested for forage. A couple other numbers I just wanted to throw in there for comparison. CRP acres in 2017, you had just shy of 1 million acres. So it's not included in the harvested cropland, but it is part of the total land and farms. And then PRF insurance at that time was 3.14 million acres. So think about that as a fraction of the acres in permanent pasture. You've got about 15% of the acres were insured with PRF. Nationally, PRF insurance has greatly increased from the 75 million. It's up over 200 million acres, but in South Dakota, we continue to see only that 3 to 3.5 million acres insured this calendar year. So not a lot of backfill directly from the insurance side on all that pasture and rangeland available. So just for perspective in there on the available supply of forage. On the demand side, what eats all that forage? Cattle numbers in South Dakota continue to remain or have stayed very stable over time. Really, you have to go way back to an earlier cattle cycle, and I would attribute this much more to just cattle cycle than even drought conditions back in the late 1980s. You can see year in, year out, we tend to have about 4 million head of cattle across the state of South Dakota. In drought years or with extreme drought conditions, you can see some of those cattle of all types and classes move into feedlot situations. They don't necessarily leave the state, or they get moved throughout the state. They tend not to leave the state except in extreme situations. So running with that sort of ongoing assumption, we'd likely to see the cattle moved around rather than leave to reduce demand for some of the forage and feed supplies. One other sort of a possible replacement for both pasture or grazing and the hay side of things would be Conservation Reserve Program or CRP land. Across the United States, there's 22 million acres of CRP. You can see here counties where we've got a little more CRP. Let's try zooming in a little bit. I just highlight some of this here. if we kind of go right down here, we've got acres and acres, or counties with more acres in CRP compared to other parts of the country. So not all this area is in drought. We've got the drought kind of concentrated up here as far as where CRP is located, and then in Washington and Oregon. So there could be some CRP acres that, depending on the county, might already be eligible for grazing, might become eligible for grazing and haying after, might become eligible for haying after August 1st, the critical nesting period. But regardless, there are some acres that may be available, and it's very much a local decision. So you have to look at the forage available on that CRP and make that decision. Is that something that would be worth taking advantage of for grazing or haying? And even if it's not in a critical area or most drought affected area, you can do non-emergency haying or grazing. And that might be another source or way to add somewhat to the hay supply or grazing supplies at the local level. Laser, maybe. CRP, just for perspective, I went back to the beginning of CRP. CRP acres were around 1.75 million acres across South Dakota. And then through time, or in the last couple of years here now, we're sitting at about 1.1 million acres. So the acres are actually up since 2012 when there were some drought conditions, but I don't see, or you generally don't see 100% of the available supply of CRP. Some of it may have been hayed or grazed last year. There's limits on how much can be hayed or grazed. So it would contribute somewhat to easing some of the feed supply situation, but it's not an absolute game changer because of the low expected yield you'd see off that land. And I just zoomed in here quick to show where are more of the acres available or more acres enrolled in CRP. You got Brown County, Lyman County, Perkins County with a fair amount of acres, but again, it's a local, there are some local stipulations as far as what's always available and how much forage might be out there. But I wanted to zoom in and show that. The other sort of thing or way that you could see some of that forage shortfall. So think of needing 2 million tons of forage. One area that generally comes up is taking some corn for silage. Just for perspective, this is the ratio of harvested to planted corn in South Dakota. So the acres devoted to corn in the state has increased over time. And in general, the share harvested for grain has increased over time. So if you go back to the early 1980s, it'd be less than 80%, or 20% would normally be harvested for silage. And then if you have things like drought years in the late 1980s, flood year like 93, and then droughts in 2002, 2006, 2012, much greater share of the crop during those years can be harvested for silage. Now, the trade-offs are that you can have, if it's a drought year, you have much lower silage or much lower supply of green material to be harvested. So that's one effect. And then you do have, in general, we have higher prices this year. That's going to encourage harvesting some of that crop for grain. But we got 2 years for recent years for comparison here. The 2012 drought year saw what had been maybe a more typical amount of corn acres harvested for silage and sent the acres way up. So much more, many more acres of corn were unintended. They were not intended to be harvested for silage. They were harvested for silage, but you can see on the right-hand side here, the trend in production. So tons I believe as harvested, tons as harvested did not increase. So even though acres doubled or even tripled here from a year earlier, the production only went up about 20%. So low yields of the silage mean that in drought years, silage is not a cure-all or a way to backfill, automatically backfill any supply shortfall that you might see. Last year, for perspective, there were about 3.5 million acres. If we run across there, about 3.5 million, sorry, 350,000 acres of corn harvested specifically for silage, and production was around 6.5 million tons. That would be, I believe, 6.5 million tons as harvested. Most of that, or about 50% of that, tends to be water. So on a dry matter basis, that's only about 3 million tons or 3.5 million tons of forage on a dry matter equivalent. So my calculation on that suggested that if we go back to, if we just look at last year, that production would have been about 12.4 tons an acre, or about 6.2 tons of dry matter per acre. And if we go back to the drought year, so if we go back to 2012, there the yield was about 8.6 tons per acre, or only 4.3 tons per acre on a dry matter basis. So what does that mean? If we were to have drought stressed corn that yields lower, or yields lower as silage, it would take about 500,000 acres above normal. So that's a fair chunk of the corn production or corn acres in the state. But if you took 500,000 acres and harvested at 4 tons an acre dry matter, you'd have your 2 million tons of forage equivalent produced. Now, protein and overall quality, palatability, and probably the worst thing with silage is the transportation factor. It's expensive and difficult to store and move silage compared to dry hay, but it does help put that number, or put the quantities in perspective a little bit. Those are what I had prepared today. Happily visit about hay prices and some of the other forage situation. Big thing with hay price across South Dakota, I'm hearing a lot of $200 a ton. If you look at Rock Valley, some of the more grass hay or more cow hay, cow quality hay is in that $150 a ton to $170 a ton area. So after you tack on transportation, that puts you right back at that $200 a ton area across the state. So then you have to ask yourself, is it worth bringing in the feed, or bringing in a portion of feed for part of the year? What does that look like relative to the cost of moving some of the cattle, the demand side of the equation? Questions? And Heather's got all the answers.
If I did, I would be sitting somewhere else other than this desk today.
No,
but I have different ways to get to the answers.
There are some things to think about with the, there is a shortage of forage. And so it comes down to what's the quality like, and what are the trade-offs of moving some feed versus moving some of the cattle. So it's on to you, Heather.
I got a question, Matt.
Sure.
And it's just a clarification. The cattle one, is that all cattle? So that includes the dairy, or had you separated that out?
All cattle, calves,
yeah,
on feed, replacement heifers, everything. And you know, a slight caveat, or a reason that we haven't seen, we were on track to have corn harvested for grain continue to like 100% of the corn crop, but I think the slight increase in, well, the notable increase in dairy cow numbers and inventories means we've got some of the corn production in South Dakota dedicated to silage and a steady demand for silage. That's why you want to look at the relative increase in drought years rather than just what normally goes for silage. Those cows are still going to be hungry this year.
Thanks.
Okay, any last quick questions for Matt? Otherwise, we can get them at the end as well. Okay, so we're going to shift gears just a tiny bit. I'm going to share my screen here, and we're going to talk a little bit more about the cow side of the equation and the components that are playing into that decision making back and forth that way. So I kind of hit this from today's changes affecting tomorrow's bottom line and doing some of that long-term planning as we're making some of these decisions on, do we cull something, do we haul anything in related to the cow situation at this point. So kind of just put down some what do we know is at this point. A lot of producers across the state, change does need to happen. What that change is kind of what we're going to talk about in some of those decision makings. We have budgets that we've created, both crops and livestock budgets that are available for producers across the state. That third bullet there says that it's really hard to get farmers to create those budgets though. So we're going to just cover a little bit of the fact that they're available. And if they need assistance putting them together, you know, Jack and I are here to help them with that so that they can make the best decisions for their operation. We're going to look at cull cow market a little bit, its cyclical situation and the way that that ties into some of our decision making. And then also keeping in mind that we have a lot of cows, pairs, and some breds that are either headed right now or will soon be headed to market because of the feed situation that Matt discussed. If you've been watching any of the online sales, there has been some cows coming in. A lot of the cull cows that I've been seeing come into the barns with a caveat of, hey, watch out, because they're coming in hot and a little upset. So if you're a cow with a disposition problem, apparently right now is the really good time for you to go to auction. I have seen some older broken mouth, no teeth cows coming into the barns, and they are separating pairs already at this point. So just depending on barn location and those types of things. Some late bred cows that were supposed to be part of a spring calving herd also kind of headed into the barns at this time as well. So really need to be watching, you know, what those trends are for when dispersions across South Dakota are really starting to happen. Matt alluded to it, Jack alluded to it, the condition reports, and this was Monday's crop condition report. If we look at our pasture conditions, we are at that 25% very poor, 41% poor, and 28% fair, with only 6% of South Dakota's pasture ground being rated as good or excellent. And that's, I didn't do the comparisons that they had put together, but that's pretty low and not very good indication of cows sticking around for the remainder of the summer, or really for that matter, if we're looking at retaining ownership on any yearlings or anything that we would put back to grass. If there's no grass out there this summer, probably we're not going to have grazing grass for winter yearling retention and those types of things as well. So some changes coming to operations happening that way. So this is the seasonal price index for our cull cows, and we really talk about the cyclical nature of the cows operation. We can see those higher areas in that June, July, August timeframe. So we are entering the end of our peak pricing season for normal cow sales. If you look at the standard deviation in April down here at the lows, that really took into 2020 into account. So that really affected a lot of the pricing situation there. So that's why that wide blurb here in April occurred. Whoop, I got a double click. if we look at current slaughter cow prices, these are from the Sioux Falls Regional Sale Barn. The monthly averages, the dotted line is 2019. 2020 is blue with the squares indicating, again, here was our COVID no sales and those types of things. 2021 is where our current prices are for cows at the Sioux Falls Regional Livestock Auction Barn. With the yellow triangles being the 2016 to 2020 average. So prices for cull cows at this time have been pretty consistent. We haven't seen a lot of changes and variations so far this year. If a lot of cows start heading to market, that might change for us. When we start talking about number of cows going to market, I pulled some numbers from Region 5 and Region 8. These are beef cow slaughter numbers only. I took the dairy cow numbers out of these numbers. Region 5 includes Illinois, Indiana, Michigan, Minnesota, Ohio, and Wisconsin. And you can kind of see that our 2021 numbers for this region are a little bit higher than our 2020 numbers and above 19 and 18 as well. If we look at Region 8 for those same time periods, the cow slaughter numbers in this region are really pretty similar to prior years. Not a lot of variation in those numbers there at all. So while there is some sales occurring, so far it appears that cows are not headed to slaughter facilities at this point in a mass exodus. So some of the things we wanted to talk about when I mentioned that having people put their budgets together is tricky, is that I had a hard time putting these numbers together in a format that would maybe make sense to people to show in a picture format. But I wanted to look at some of the decision-making components that should be thought about and brought into long-term planning. You know, drought is a pain when it's here and we make some decisions, but we don't want those decisions to be knee-jerk decisions. So I've got 3 different slides with 3 different scenarios on, you know, what could we be doing for our operation to look at that 2-year effect on economic impacts. So I'm going to put the general layer of disclosure on here. You need to have your own feed costs put into these decisions. You probably need to shock some of those feed costs, especially if we're planning on retaining a lot of our cows as long as we can. Make sure that we're shocking that price with some increases due to the lack of production that's around. Maybe we need to be shocking the feeder calf price or our cull cow price as well, because maybe these prices are too high given the timeline that you've decided to sell. So some caveats into putting budgets and numbers out there. These numbers are just for educational and reference purposes only. With regard to the fact that I tried to make them as accurate and real as possible, but they're not real for your operation. So this first decision looks at maintaining our cow herd the way that we have it and bringing in about 20% more feed on a cow basis than what we might normally have involved. So if we look at I have a 200 head herd here, so each cow represents 50 head. Come November, we're going to sell all of the regular calves that we normally have. January 2020, we've got our regular mama cows, and then come November 22, we have our regular calf crop to sell. Given these scenarios, you can see that my 2021 cow costs and 2022 cow costs are the same. Might not be what happens for your operation if we're making different feed cost changes, but I did add extra feed in for those cows that we have to buy to supplement this summer getting into winter feeding time. Put some calf income in, normal cull cow income on this 200 head herd, and we come up with kind of a 200 cow herd effect of about that $13,000. Now remember, I said these are for reference purposes only so that we can evaluate some different decisions and some things and options that might be available to a producer. one of those other options that we could look at in this one is we're going to, come November, sell 25% of our cows. And this 25% is above our normal culling rate, right? Okay. So we, instead of feeding those cows and buying extra feed, we sell some of our cows, and then we look at moving forward into the January timeframe. We only have 3/4 of our normal cows that we're feeding through the winter. Come November of 2022, we have 3/4 of our normal calf crop to sell, and we're looking at buying some replacements back to get our herd back up to size, making the assumption that we went through the drought. It's hopefully over, and now we can go back to full utilization of our pastures and a normal capacity rate. So this brings our herd effect to a $7,000 income. We had to buy those cows back, back and forth that way. So we had to look at those types of things as we move forward. The next decision looks at selling some of those cows early. So we're going to sell cows. We have all of our calves to sell in 2021, but we're making the assumption that we're going to repopulate in January, and we brought breads back, and that gives us a full calf crop to sell in 2022. So as we look at that, we jump our herd effect back up into that $17,000 range. So making those decisions and looking at that change over the long haul, we need to know what our calf costs are going to be, what our cow costs are, what our anticipated selling price for calves would be in those next 2 years, what our price for bred cows is going to be. I think I used $1,400 for a bred cow in this example, but we need to take those items into consideration and those longer term effects on when we make the decision to buy cows back and what that has for a total income from our calf crop side of things on us. So to help you put some of those numbers together, the SDSU Extension webpage has a lot of these tools. You can put your budgets together for your beef cattle in this beef cattle budget calculator. There's feed nutrient calculators up there if you're looking at making different decisions to better manage your feed costs. You can look at that. The grain storage calculator is there for whether you're buying or selling grain, when you store it, how long you store it. Matt discussed the conversation about moving cows or moving feed, which would be the most economical for your operation if you're looking at that option. And this calculator really helps you do a lot of those. As maybe the summer rolls on and we get into that silage and earlage component, this calculator here, the silage and earlage calculator, really helps you price some of that in the field silage and earlage, and looks at some of the travel and distance that are being hauled and those types of things. So a ton of tools up there if you're interested or need assistance with some of that decision making. Some of the big questions that are coming in also are related to the USDA programs that are available. We don't have calculators for these, but we tried to put together an article that helped explain what the programs were that are available, how they might work for your operation, and how they might provide some income for that supplemental feed if you're looking at that being an option. Whether it's through the livestock forage program, the emergency hay of CRP acres, and the variety of rules and regulations tied into that. You really want to be talking to your local FSA office about your contract specifically, because there's a huge variety of information and what's allowed in your contract versus what might be in your neighbor's contract, given the piece of ground that you have enrolled in the program. There's also the emergency designation based on the Secretary of Ag's designations. So there's some loan funds that might be available. Also through the ELAP program, if you need to provide supplemental water to cattle that are out on pasture, there's some different funds that would be available to help you sustain that program if that keeps cattle out on pasture for your operation as well. So just another thing that's available and some other tools. But you can check that whole article out online on the SDSU Extension webpage. And then if you click the Ag Business tab, scroll down to the bottom and that article should be there for you as well. So that's what I have for presented information for you today. If you need to get a hold of me, please feel free to do that as you move forward through the decision-making parts of the program.